Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Better than expected. Well, as I've said many times in one way or another on Investor's Edge, investing in markets is all about expectations. This earnings season has been no different. At the beginning of the year, the S&P 500 was expected to grow second quarter earnings, the ones that are now being reported, by more than 8%. However, at the beginning of July, just before the actual reports started coming in, that expectation had fallen to just 2% growth. So it's no wonder now that everyone is beating expectations when they report their quarterly results. This isn't a new phenomenon. It happens almost every quarter with corporate earnings. It's the direction of estimate changes that matters. Right now, estimates are falling at a much slower rate than they were earlier this year. Hence, the reason why stocks are going up. For this week's featured insight, markets climb a wall of worry. There's a popular saying out there that markets love to climb a wall of worry. And despite stocks trading at or near all-time highs, there's actually still plenty of worry out there. The percentage of bullish investors, as reported by the American Association of Individual Investors, stands at just 36%. And that number has fallen for 3 weeks in a row, despite the strong performance in equity markets. Another survey showed just 10% of investors are getting more aggressive with their portfolios right now, while nearly 40% are getting more conservative. I could cite plenty of other examples, but the bottom line remains that investors are quite far from being all in on stocks, which is a good indication that this rally still has room to run. Looking ahead, Fed Palace of Intrigue. There's no shortage of drama surrounding the Federal Reserve Bank. The feud between President Trump and Fed Chairman Jerome Powell has been well documented, but the critiques, and yes, mostly from administration officials and their surrogates, toward Powell continue to grow and get louder by the day. First, it was pressuring the Fed to lower interest rates, now that inflation has moderated. And that hasn't stopped, but more recently, it's been criticizing the Fed's $2.5 billion building renovation in Washington, D.C. That does seem a tad excessive if you ask me. But either way, next week's Fed meeting will be quite interesting, even though there's about a 99% chance they don't do a darn thing, at least regarding interest rate adjustments. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.